I want to bring in Yahoo Finance's Jared Blikre now for a look at the market action. And Jared, we're seeing that the mega caps are leading today's rally. Tell us more.
That's right. When we got that big jobs number this morning, and I was talking about this in the prior hour, we got a rally in the Nasdaq, and we got a sell-off in the Russell 2000, and that's because the environment where the Fed prints for longer, keeps interest rates lower for longer, that benefits the mega caps more. So let's take a look at the Wi-Fi Interactive, and we can see Google and Microsoft having their best day in a month. Alphabet here is up 2%, Apple's up 1%. By the way, Apple having its best day in 2 weeks, Microsoft up nearly 2%, and Amazon also climbing. That's up 1.5%. Be neglectful if I didn't mention Tesla. Tesla's up 1/3%. We're going to be talking about that in more detail in a minute, but you want to take a look at what's happened this week. Definitely favoring a lot of the NASDAQ 100 components. Kind of a different story here when we look at, well, there's an upgrade, there's that it's a similar story. Plus we got Apple and Microsoft, but we are seeing some of these issues flagged today, mainly in the energy and financial sector, which you were just talking about. And one more point here. We did get some news on Apple this morning from the EU tech chief, and they are warning against limiting competition. So the EU's executive vice president for digital issues is warning that they're using privacy and security concerns to thwart App Store competition. So doesn't look like Apple investors care too much about this. We get incremental news on this just about every day, but just thought I'd throw that out there as well, guys.
Yeah, lots of green on that screen, Jared. I've been taking a look at Tesla, and despite the semiconductor shortages and concerns about sales for that company in China, their sales for last quarter basically blew it out of the water.
Yeah, it was a record showing, and I got some commentary by the street here. So here's New Street Research, and they're saying deliveries of about 201,000 units in line with consensus and marginally below New Street's expectations of 204,000. So didn't beat their particular number, but saying production capacity could be close to 2 million units by the end of 2022. And if you're doing the math here, if you multiply 200 times 4, that's 800,000 for the year. They might get a few more out, maybe even reach 1 million by the end of the year. 2 million by 2022. That's very aggressive, but if they think it's possible, then I would be very impressed with that. They maintain it with a buy price target of $900. Let's just take a quick look at Tesla stock here. I'm going to put a candlestick chart on going back about 3 months, and you can see that we got this nice breakout here, and you can see it even better on a 6-month chart. There we go. I'll connect all the dots here, and this isn't a perfectly straight line, but we did manage to break above that, and we're just kind of treading water here. You take a look at the choppy sideways action over the last week. That's pretty constructive because we have the beginnings of a nascent uptrend underway, guys.
All right, Jared, let's talk about electric vehicles now, and that's Lordstown Motors. I see that they're not doing too well after a report of a probe from the Justice Department. Tell us what's happening there.
Yeah, this has to do with potentially inflated order totals. This is a pre-revenue company. There are numerous short reports out on it, as there are a number of other SPAC EV plays. But let's go back to the Wi-Fi Interactive, where we can see Lordstown Motors ride. That is the worst performing tick here. That's down 11%. But I also want to note that Workhorse, that's down 9.75%, so almost a similar amount. And then we have Arcimoto here, that's down 9%. Li Auto down 6%. So not the best day, and I could see that some of these moves are maybe in sympathy. This is a 7-day look at Lordstown Motors, and you can see the steep drop off right there. And if we go to a max chart, you can really see it's, first of all, it's sunk below the SPAC IPO price of $10, and it is consolidating here. But the fact that it's broken to the downside like this, and here's a look at the 3-month view, this is some negative price action that we're looking at right there. So just to recap, this is the U.S. Attorney's Office in Manhattan filed or said that the probe is in the early stages. And I do have a spokesman's commentary from RIDE saying Lordstown Motors is committed to cooperating with any regulatory or governmental investigations and inquiries.
And Jared, just a couple of days ago, we were talking about the blockbuster IPO of Didi, the Chinese ride-hailing company. And now the stock is plunging because China is investigating the company with regards to cybersecurity, saying that it could even be a national threat. What can you tell us?
Yeah, this is really odd to me because they literally went public this week. You think China could have waited a little bit to, or at least postpone the offering the way they did with Ant Financial, kind of just putting the kibosh on it. This really adds to regulatory risk for not only Diddy, but some of the other companies out there. So if you take a look at the Chinese stocks right now, a sea of red. And the standout here, Diddy is down. It looks like the almost the most. It's down 8%. But we've seen this before. And these are the only three trading days we have for this particular stock. We can see on an intraday basis, just kind of treading water here. But the Chinese regulators have kind of done this in fits and starts, applied the law as they see it unevenly in a lot of cases. I guess you wouldn't be entirely surprised about that, as it is the Chinese Communist government. But I do want to read a key quote here, and this is coming from the company in a statement. Diddy will fully cooperate with the relevant government authority during the review. We plan to conduct comprehensive examination of cybersecurity risks and continuously improve on our cybersecurity systems and technology capabilities. So more red and more regulatory risk for all the Chinese companies here is my bottom line.